Hello, everyone. Welcome back to Current Economy and Investment Insights. Today is January 19, 2021. I'm Ron Jankowski with Channel 4 in Palos Heights, and Paul Munichol with the Ameriprise is going to be with us, and he's at his studio to keep distance at his home. So I'm going to let Paul take it and give us an update as to what happened in the marketplace. Take it away, Paul.
Thanks, Ron. Today, let's talk about inflation and the outlook it may have on our markets. There's been a lot of talk about potential stimulus under the new Biden administration, and that could cause inflation. And let's see how it might affect our markets. Investor inflation expectations have been rising in recent months. Now, indeed, we believe a variety of factors are likely to converge over the intermediate term to send the consumer price index to levels it's not seen on a sustained basis in many years. However, we believe the circumstances fueling this pattern should be temporary, and we believe Fed officials will view it similarly. So in our look at Ameriprise, we see year-over-year CPI rates as slowly subsiding in the second half of the year. Of course, this is far from certain, and how markets responding to rising inflation metrics until that time remains to be seen. Most forecasters, including us, look for inflation measures to grow over the next few months for a variety of reasons. First, year-over-year rates should see a solid boost in the months ahead, particularly in Q2, as price levels are compared against the depressed levels of Q2 last year. Second, should vaccine availability and effectiveness truly result in a reopening of economic activity, as spring turns to summer, demand for certain goods and services could surge. Again, that's in our view. Further availability in many of these same sectors is currently much lower than normal and would likely take longer for the supply side of the equation to rebound, thus foster higher prices. We believe these factors are likely to drive headline CPI to as much as 3.5% in May, when 2020 price levels were at their lowest. Beyond, however, we believe inflation pressures should slowly subside as comparisons rise and supply slowly catches up with demand levels. Now, while we believe Fed officials are likely to see the pattern as transitory, financial markets may need to see lasting, tangible evidence of moderating price pressures before giving up on the inflation risk trade. Inflation is something we are watching closely at Ameriprise, as many investors are. And again, should you have any questions on how inflation may affect your own personal portfolio, feel free to give me a call directly at 708-226-3412. And I'll send it back over to you, Ron.
And thank you, Paul, for that update and a summary as to what took place in the marketplace. Ameriprise had also is sharing the information that I'm going to share with you as of this morning. U.S. stock index futures are broadly higher as technology and energy shares lead early gains. U.S. government debt prices are lower ahead of the Treasury Secretary nominee Janet Yellen meeting with the Senate Finance Committee. The WTI crude oil is holding at near an 11-month high as production cuts help offset the virus shutdown concerns. And of course, that is going to affect our gas pumps here locally. Goldman Sachs beat expectations for fourth quarter profit on strong trading and investment banking results. And the year-to-date market returns is a plus 0.35%. That's for the S&P 500. The Dow Jones is a plus 0.75%, and the NASDAQ is a plus 0.87%. And that's it for Current Economy and Investment. And we are going to be back with Your Money. Stay with us. Paul usually has a Interesting topic to share with us. Stay with us. We'll be right back. And thanks for staying with us with our new show called Your Money. Paul is going to share a topic with you of great interest, and I'm going to let Paul take it from there.
Okay, for the second half of the show, I want to go over 5 simple yet smart money habits. And given what we've all been through in the year 2020, I think simple is the way to go. I don't want anything challenging this year. So let's go ahead and begin. There's no denying that it can take some work to create good habits. Becoming more disciplined about your finances is no different. Yet smart money habits can pay off over time, helping you increase your bank account and help you create a more stable financial life. So let's consider these 5 simple tips to help you improve your current financial situation. Number 1, practice the principle of mindfulness. It's as simple as paying attention to your spending habits and putting the brakes on impulsive purchases. When you're intentional with your money, you make rational decisions based on what you can afford and what you need. Strategies to help you be more mindful include creating a monthly budget, making lists before going to the grocery store, and holding off on large purchases until you can really afford them. Point number 2, keep tabs on your financial transactions. Be very detailed about every financial transaction, no matter how small. Even though checkout clerks use computerized registers, they can still make mistakes when entering items or making change. Whether you're at the grocery store or the department store, watch as items are rung up to ensure you're being charged appropriately. And check your receipts. Count your change. In the case of banking errors, what you don't know can hurt your bottom line. So check your online bank statements daily to monitor changes and also watch for fraud, which is definitely on the rise. Point number 3, show respect for currency. So when you mistreat money, you diminish its value and give yourself permission to abuse it. Don't wad up your bills or allow change to accumulate on the bottom of your purse. Instead, store it carefully and keep track of what you've got. Point number 4, play your cards right. It used to be that a major credit card was absolutely required for online purchases and travel reservations, such as airline tickets, hotel rooms, and car rentals. In today's economy, it is possible to manage many, if not all, of those transactions with a debit card. Credit cards can provide advantages through the rewards programs, and disciplined use can help build credit worthiness. Yet many cards come with an annual fee and hefty interest rates when you carry a balance. To limit credit card spending, consider keeping your credit card at home and carry only your debit card in your wallet. And that brings us to the 5th topic. Look within and remove barriers to financial freedom. If you've had a hard time making wise financial decisions in the past, you may be unconsciously sabotaging yourself. For the most part, money attitudes arise from a complex mix of upbringing, culture, and self-control. To help overcome this, focus on the things you consistently spend too much on. Is it dining out, maybe shopping for clothes, taking vacations? Hone in on whatever your weakness is and try to change your spending habits in that particular area. In summary, while each of these 5 tips can help you build your financial muscle, one of the best things you can do for your financial life is to meet regularly with a financial professional. An experienced financial advisor can provide financial coaching, help you identify specific strategies for saving and investing for your future. We recommend finding a qualified professional whom you can trust to discuss all aspects of your financial life, has the time to meet with you annually or as often as you're required to discuss your financial goals and adjust your spending habits and savings so you can stay on track. And as always, to the viewers at home, if you do not have a financial advisor or are looking for a second opinion to the one you're working with, you can always give me a call directly. I'm here to help. My number again is 708-226-3412. Let's have a great week out there, everyone.
And thank you, Paul, for that topic and sharing that with us. And we would like to ask you, if you have any questions, give Paul a call, and he will bring that up on the next show and address those answers. For Paul Municle with Ameriprise Financial, myself, Ron Jankowski with Channel 4 and Palos Heights, we wish you a good investment day.